Welcome everyone to our webinar on sources of government finance for UK businesses during COVID-19. I'd like to thank you, Deloitte, for joining us today and helping us to deliver the session today. My name's Atif. I'm one of the project managers at the Chamber. I've got my colleague here with me as well, Adrian, who is our Business Alliance Manager, and he'll be facilitating a lot of the discussion today with our speakers. Just to quickly give you a quick format of the session today. So I'll hand over to Adrian, who will introduce himself and then move on to our panelist, who will do a quick introduction about their roles and how they're working at the moment, and maybe touch on some of the questions they are being asked by clients at the moment. Then we're going to go into a quick presentation from Deloitte and then carry on the discussion as a Q&A, and then I'll provide some chamber updates. So Adrian, I'd like to introduce you at this stage. All our participants, thank you for joining us, and all the attendees. Just to remind you, there is a this is a Q&A session, so do use the Q&A facility to ask any questions you have at this stage. If you just want to share your maybe your positions and what kind of industry you're from, I think that will help us to just understand who's in the room. So Adrian, if you'd like to introduce you and hand over to you, please. Thank you.
Atif, thank you very much indeed. Good afternoon, everybody. I'm obviously Adrian McMahon, Business Alliance Manager, and here with the Thames Valley Chamber of Commerce. Business Alliance, for those who are unfamiliar with Business Alliance, is the top tier of membership within the Chamber, and we are delighted to be joined by colleagues from our long-standing Business Alliance member Deloitte here today. Thank you very much indeed, ladies and gentlemen, for your time and expertise, which obviously, given all of what we are reading, hearing, experiencing over these last number of weeks, is a very timely intervention indeed, as supported by recent studies, the most recent of which is from the British Chamber of Commerce Business Impact Tracker, highlighting that companies are simply either not getting access to the finance or having their applications declined, etc., etc. But clearly it's creating a perilous situation. So having this quality of expertise here today is certainly very welcome indeed. Thank you again to everybody who is attending here today. And without further ado, I'll pass over to Simon Miles from Deloitte. Thank you.
Good afternoon, Adrian and Atif, and thank you very much for the opportunity for us to join your members on this call today, which we're grateful to have. And just briefly to introduce myself, I work in our clients and marketing team in the South East with a particular focus out of our Reading office on the Thames Valley, and making sure that we as a firm are in the marketplace, listening to our clients and our contacts, and understanding their issues and bringing the right parts of Deloitte as and when to bear. But I will now pass on to my colleagues, so we can go with Karen. I think is next on the picture, if that works for you, Karen. I'm not sure if that's correct. Right.
Hello, good afternoon, everybody. My name's Karen Gosling. I'm a director in Deloitte Legal. I specialise in employment law. So there are a fair few employment law considerations coming up as a result of the furlough scheme, and we're helping clients with those. And I'll take you through some of the key points of that in my section. Thank you.
Thank you, Karen.
Thank you,
Chris,
Karen.
do you want to go next?
Yes, hi all. My name is Chris Edwards. I'm a director in the corporate finance business, covering Reading and the wider South. I'll be covering the various corporate loan schemes that have got some government support attached to them on the webinar today. Yeah, I'll be going through those shortly.
Thanks, Chris. And Kevin?
Thanks, Simon. Yeah, so Kevin Freeman. I'm a tax director based in our Reading office, working across the Thames Valley and the South East. I spend most of my time working with privately owned and private equity owned sort of fast growth dynamic businesses, both UK and international, and advising them sort of right through the business life cycle from a tax perspective. As you can imagine, an awful lot of conversations at the moment around some of the tax measures the government have introduced related to COVID-19, and I'll be covering some of those in more detail later.
Thanks, Kevin. And Atif, if we could have the first slide, please. Great. Thank you very much. So if we move down that one onto the corporate loan schemes, and that's one that Chris Edwards is going to talk through briefly on. If I can ask you to do that, please, Chris.
Yes. Hi, everyone. I'm sure many of you will have been reading about these corporate loan schemes either in the press or indeed on sort of online. There is a sort of fairly detailed slide here that I'm going to sort of run through quite a sort of fast pace and at a high level. But please, if you do have questions, there will sort of be an opportunity for questions later on in this session. But I'll rattle through this at sort of a fairly fast pace. So there are broadly three schemes available, and largely targeting different sizes of businesses. A C-bills scheme, a CL-bills scheme, and a CCFF scheme. So I'm actually working from the bottom upwards. I probably will start with the bottom, the C-bills scheme. In terms of number of companies, clearly the C-bills scheme will cover the largest number of companies by volume. The CL bills, a few less than that, and the CCFF, the top one, I think, will cover the fewest number of companies by volume. The C-bills scheme is targeting companies up to 45 million of revenue. You can apply for a loan of up to £5 million in total. You apply for one of these loans through an accredited lender, and I've attached a web link on this particular slide. The British Business Bank, which lists all the accredited lenders under this scheme, I think here about the high street lenders as a sort of a good initial port of call, but of course there are sort of a number of other accredited lenders in the market, independent lenders in the market. So what do? You make an application to an accredited lender for an amount of money. That lender then seeks a 80% guarantee from the government, but crucially, that lender will still be at risk for 20% of any loan that they give to a customer. And therein lies one of the reasons why some customers are being turned down for loans, and indeed why some loans are taking longer to issue, because these accredited lenders are taking some of the risk on these loans. The products can be issued over a 3-month tenure up to a 6-year tenure. They're quite attractive insofar as they tend to be sort of interest and fee-free for the first 12 months, with the government effectively sort of paying the interest and fees for that first 12-month period. And personal guarantees may be required for some of these loans, so do be aware of that. Now, I have got some sort of tips for how you do these applications, but I'll cover the CL bills schemes sort of second, and then come back to the tips, because the tips really sort of cover both the C bills and the CL bills schemes. So CL bills is very similar to C bills, but just targeted at bigger businesses. So now we're talking about companies between a revenue of 45 million and 500 million. And again, within that, it's distinguished further. So companies with a revenue of 45 million to 250 million of revenue can apply for a loan of up to 25 million. Companies with a revenue over 250 million can apply for a loan up to 50 million. Now, the tenure of these CL bills products are shorter than C bills, so they're from 3 months to 3 years. You may have spotted below that the C bill scheme is up to 6 years. The CL bills product is slightly less attractive insofar as the government doesn't offer to pay the interest and fees for the first 12 months. So the borrower does need to pick up the interest and fees for the first 12 months of that product. And again, you would apply to an accredited lender. I think our slide actually in the pack says that the accredited list of lenders has not yet been published. That's slightly out of date now, actually. There is a, this product went live last Monday, the 20th of April. There is now a relatively small list of accredited lenders. Again, I'd think about the high street banks as the principal sort of parties on that list, and that list is on the British Business Bank website. I do know there's a lot of lenders going through the accreditation process at the moment, so I think the list of providers will expand. Yeah, it's a very you make an application to that accredited lender, and very similar to the CBILS scheme, that lender then tries to get an 80% guarantee from the government for the risk. But again, crucially, the lender still bears 20% of the risk. So a few tips about how to make your application. I would always recommend starting with your current lender, typically the bank that provides your clearing facilities. Why do I recommend that? Well, they already know your business, so just in terms of speed of response, they're likely to be the fastest lender to respond. You're going to need to prepare some financial projections. I'd recommend preparing your financial projections over the same time period as the period you want the loan to be structured over. So if you want a 3-year loan, I'd recommend sort of giving the bank 3 years of projections. A P&L, cash flow and balance sheet, obviously sort of all of those elements I'd advise to include. Now, crucially, you do need to evidence that you were viable, profitable pre-COVID-19, and that you'll be sort of viable again post-COVID-19. So those are two very key criteria for lenders assessing these loans. And so a few other kind of tips for you. In preparing your application, you really want to evidence as much as possible that you've tried to manage liquidity from internal resources as far as you've been able, as far as possible. So taking advantage of other government schemes in relation to tax and employee matters, which I know Karen and Kevin will cover later on this call. Stopping any discretionary spending that is not sort of business critical, and just generally seeking forbearance, so extended credit terms from other creditors. That might be sort of time to pay agreements with HMRC. There might be interest holidays from lenders. It may be sort of delayed sort of payments to landlords, as an example. But just really sort of evidencing in your application that you've tried to do as much self-help as possible. So those are, I suppose, my top tips for doing your application. So the final product, the COVID Corporate Financing Facility, the CCFF. Now this is targeted at the very largest businesses making a material contribution to the UK economy. So there'll be very well-known names, but kind of relatively few in number. By way of an example, I think of a utility business as an example of a company that may qualify for the CCFF. Now, why would they potentially qualify? Would they'd be, well, so large, very predictable businesses, typically very profitable businesses. So that is definitely what this scheme is targeted at. The product here is companies that issue short-term debt up to 12 months maturity, known as commercial paper. You do need an investment grade credit rating to qualify for this scheme. Again, there will be relatively few companies in the UK economy with an investment grade credit rating. You work with effectively an approved lender to issue commercial paper, and there's a list of the contacts for this product on the UK Finance website. And essentially, when you issue this commercial paper, a combination of HM Treasury and the Bank of England purchase that short-term debt from the company. So that's the scheme targeted at the very largest businesses. Again, I suspect there'll be sort of relatively few TVCC members that would qualify for that scheme. But yes, certainly I suspect most of the TVCC members would potentially qualify for either the CBILS or the CLBILS scheme. So I suggest that's my sort of session on corporate loan schemes.
Thanks, Chris.
Perhaps now, yeah, I'll hand back to you, Simon.
Thank you, Chris. That's great. I'm handing over to Karen now. Sorry, can you move, if that's the right, can you move the slide and up another one, please, Atif?
Simon, could I just remind listeners in terms of Q&A, obviously we are fielding some questions. It's live at the bottom of your screens. There should be a Q&A box, and please feel free to submit. We're obviously collating them, and we'll come back and revisit at the end of the conversation, or at the end of the presentations rather. And also just to remind people who may be frantically taking down some notes, that actually the recording of this webinar will be featuring in our now recently introduced online webinar library. So that should take away a lot of the strain in terms of note keeping for a lot of people. So thank you, and back to you, Simon. Thank you, Chris.
Thanks, Chris. Thanks, Adrian. If I can hand over to my colleague Karen now, please.
Thank you. Thanks, Simon. So I'm here to talk to you about the employee furlough scheme, or the coronavirus job retention scheme, that was issued by HMRC and announced by Rishi Sunak on the 20th of March. There's a lot of detail on that slide, and I don't propose to go through all of the detail, because I think a lot of companies, if they're going to furlough employees, already have. But what I thought I would do is draw out some key themes in terms of what we're seeing from clients and what questions they're asking, and what difficulties or glitches there appear to be in the scheme. So, as you probably know, furlough is a new concept under UK employment law. We've not had anything like this before, so we've all been grappling with what it means, and there's been various iterations of the employer guidance and now the Treasury direction. The portal went live on 20th of April, last Monday, and the reports from clients seem to be that the submission of data on the portal has been relatively smooth so far, touch wood. In terms of the practical tips and issues I wanted to go through, I've got a few on my list, but obviously I'm happy to take questions and any issues that you may have if you have employees on furlough. The first issue I wanted to talk about was whether employee consent is required to being put on furlough. And this was raised as an issue when the direction came out on the, I think it was the 17th of April, but it all blends into one at the moment, where it said that the direction said that agreement was needed between employer and employee in writing, and that rather put the cat among the pigeons, because the previous guidance had said that there needed to be agreement, but didn't say that that needed to be in writing. So although the fact that you're sending an employee on furlough had to be written to the employer, you didn't have to have written acceptance from the employee back, and the direction seemed to indicate that that was what was required. And many employers had already sent their employees on furlough without getting that written agreement. So that was rather unwelcome. The HMRC have now confirmed that you don't need written agreement from the employee, so that's good. They've clarified that. But you do need what's known as implied consent. So the employee does have to have indicated some way that they agree to being sent on furlough, because it's a change to their employment contract and their terms and conditions. So where you've used the implied consent route, so for example, by sending the furlough letter out to employees and saying that we will assume that you have agreed unless you object, that would be an implied consent. It may be worth checking that this holds up, but just be careful with seeking consent again, because you don't want to indicate that your current arrangements are somehow not compliant. So that might need a bit of finessing. The second thing I wanted to talk to you about is holiday, because there's been some backwards and forwards on that as well. And the issue is whether holiday continues to accrue and can it be taken during furlough leave. Well, it's very clear that holiday entitlement does continue to accrue. So your employees, whilst they're on furlough, will continue to accrue rights to paid holiday. It's now clear from HMRC that holiday can be taken during furlough leave. So you can either request that your employees take holiday or accept any request that they want to go on holiday. But if they are on holiday during furlough leave, then the normal holiday pay rules will apply. So this means that employees will be entitled to 100% of their normal remuneration. Now, the job retention scheme only pays out at 80%. So if you're not topping that up, as a matter of course, if the employee is on holiday leave, you will need to top that up because they are entitled to 100% of their pay during that time. Issues to consider as well in relation to holiday are sort of practical, pragmatic business issues. If you are not permitting employees to take holiday leave during furlough, as that holiday continues to accrue, can the business sustain many holiday requests as we come out of lockdown when furlough ceases? So it might be worth considering whether you want to require employees to take holiday during this period. The next thing I wanted to talk about is the prospect of re-engaging employees to allow them to participate in the furlough scheme. So what the guidance said was that if an employee had recently ended their employment, or their employment had recently ended, they could be re-engaged or rehired so that they would qualify for payments under the scheme. Because if you remember, an employee had to be on payroll as at 19th of March and had to be notified under the RTI system to qualify for furlough payments. I have to say we haven't seen much re-engagement going on in our clients, because it brings a lot of other issues as well, in that you're re-engaging them as an employee, so they have, you know, all the normal employment rights and their employment continues. So we haven't seen many clients re-engaging them, but I'd be interested if you have any views or any experience of that. So the scheme was implemented not to be a direct alternative to redundancies, but the aim is clearly to help businesses manage and therefore reduce the need to make redundancies. So you're not prohibited from considering whether you need to make redundancies during the operation of the scheme, but I think this does need to be carefully considered. Firstly, to make sure that you don't breach the furlough conditions and risk the payments under the scheme. But also, I think from an employee relations perspective, we are seeing challenges from employees where employers have decided to make redundancies instead of operating the scheme, because their argument is that the employer should, in that case, have put them on furlough rather than making them redundant. There's no prohibition in the scheme from making those redundancies, but I do think if you're planning to look at that, then it should be considered further in terms of what challenges you might face from your employee population. And that leads on to how you communicate with your employees during furlough. I presume as employers that you are all maintaining some line of communication with your employees, but you need to make sure that any responses that you require from them don't amount to work, because the furlough scheme prohibits employees from carrying out any work as at the time they're on furlough leave. So that was it in terms of sort of mechanics around the furlough scheme itself. But I just wanted to quickly mention the future and contingency planning, because at some point in the future, the furlough scheme will stop operating, and at some point we all hope that we will be out of lockdown. So we've been starting to consider with clients how that impacts upon their businesses and their employees. So how quickly can you get your employees back from furlough leave if you need to? What will business as usual look like after lockdown? Are you going to need to make operational changes or other restructuring or redundancies at the end of the scheme? So this is all more about planning for the future and putting in place some contingency planning now, because where these impact upon employees, there's a time lag in employment law terms. You can't immediately make decisions and take action without usually going through some form of consultation process with the employees. So it's worthwhile having a think about what business as usual might look like when we come out of lockdown as well, to take some preliminary steps maybe to manage your employee population for that time. So that was all I had to say. I'm very happy to take questions and at the end, obviously. So I'll hand back to Simon now. Thank you.
Thank you very much, Karen. That's really helpful. And if I can hand over to Kevin now, I think we just need to move the slides again, please, to the tax one. There we go. Perfect.
Before we go to Kevin, if you don't mind, could I just put a question there to Karen? That was an excellent presentation, as indeed both presentations so far have been. Thank you, Karen. But just on the point of the period of consultation on, if you like, re-entry from furloughing, what are your own thoughts on that?
I think it depends upon what you're planning to do. So if you're going to take any measures that will impact upon employees, so redundancies, individual redundancies, all require prior warning and consultation with the employees to avoid unfair dismissal risks, and where you have a certain number of proposed redundancies, anything north of 20, then there's consultation required with representatives of the employees. So I don't know whether there will be a recognised union or existing employee reps, but there may be some steps you can take in order to get the reps in place so that you can start that consultation sooner rather than later. But generally, in employment law terms, we sort of operate on a basis of reasonable behaviour. So where you're going to take decisions or actions that will impact upon employees, then normally employees would need to be at the very least informed about those actions as well, just so that they can understand how those will impact upon them. Does that answer your question?
Yes, it does, Karen, but in terms of reasonable, just for guidance, would you expect that to be?
It really depends upon what's being proposed.
Okay.
So
okay.
The law requires consultation if redundancies are proposed, but generally if you are looking to reduce working hours or change terms and conditions, the more significant the change, the more consultation, the more you would need to engage the employees, as a rule of thumb.
Excellent. Okay. Chris, sorry, can I just pick up a question that's come in there as well? Interesting, the definition of viable post-COVID-19. That sounds like to me as if it might be the ultimate crystal ball, you know, in terms of reducing lender risk. What would you be inclined to say there to provide some confidence to anybody putting together a proposal to secure that valuable finance, please?
Yeah, I mean, it's an excellent question, this, isn't it? Because when you're thinking about planning your business in the future, you may have, it'll be very difficult to predict what it's going to look like in 3, 6, 9 months' time. I think you can just, without sort of trying to sort of, I don't know, dodge the question, is just give it your best shot, really, I suppose. I mean, I think lenders are kind of expecting that kind of that you well, obviously depending on the nature of your business, that there's a sort of a phased I don't know, restarting of your business, rather than kind of, you know, a sort of it's off one day and it's on the next day sort of type sort of modelling. I think they're also expecting to see some sort of effectively downside sort of sensitivity analysis. So let's say you know your base case is you're going to start in July, let's say, but what if you started in September or something? So I'd sort of recommend sort of thinking about what are the risk areas. But yeah, I mean, you know, I suppose you have to kind of, at some point, you have to assume that by a certain date, you know, your business will be back trading as normal, as though it was sort of, or you know, as though it would have been sort of pre-COVID-19. And I don't think a lender is going to sort of criticize you for making those assumptions, because you have to. Nobody knows, but I just state your assumptions very clearly about kind of how you're sort of predicting your business is going to sort of restart, when it's going to restart, and kind of what those sort of downside risks might be.
Excellent answer, thank you. Would you have some guidance with regards to, you know, obviously it's a risk adverse environment. Would it be that, you know, you're more likely to get your application approved if you are guiding that revenues will be subdued to the order of maybe 20-30%? Or, I mean, it seems a reasonable assumption that we will return to pre-trading levels at some stage, so therefore be a little bit more bullish and guide on, you know, revenues, let's say, previous 3 years.
Well, I mean, just one example with a client that I'm working with, who's in sort of a leisure business, where actually sort of his business is completely closed because ordinarily it'd be sort of you know, a large number of sort of tourists effectively visiting sort of his business. So his sort of first go at the application, he submitted with a sort of a 1 July sort of almost like a hard opening, if you will. Sort of it's off, you know, it's closed on the 30th of June and open on the 1st of July. His lender came back and said, look, can you send me another version of your application with a later opening and perhaps sort of you know, just you know, a sort of a phased, you know, some sort of phased sort of restarting of your business with perhaps, you know, a lower visitor numbers for a sort of a number of weeks, sort of ramping up to kind of, you know, a more normal level of visitor numbers. So I think it's just, some of it's just sort of, I don't know, dare I say, sort of common sense really, of I don't think you shouldn't be sort of, you know, you need to kind of be illustrating perhaps the effect of sort of a couple of sort of opening dates or restarting dates, and some sort of rephasing, so your business doesn't kind of go back up to sort of 100% capacity on day one. It perhaps ramps back up over sort of a few months.
Excellent. Okay, thank you for that. Back to you, Simon. Thank you, Chris.
Thanks for those, and thanks guys for answering those questions. So if I could hand over to Kevin Freeman now, please.
Yeah, thanks, Simon. So I've got the slide there on tax-related measures, of which three main ones that we'll touch on: the time to pay, VAT deferral, and the income tax payment deferral. So time to pay arrangements. So this is something that you may be familiar with. It's been around for probably about 10 years now. But in light of the COVID-19 situation, the government have pushed more resource at this, and also HMRC are making it easier to agree at a time to pay arrangement. So what it allows you to do is to defer current tax debts over a period of between 3 and 12 months. And it's worth noting it's for current debts, current liabilities, not prospective amounts. So, for example, if you were doing this on a payroll, monthly payroll submission, then just because you've done it 1 month, that's not enough to assume that will roll forward for later months. You need to go back to HMRC and ensure there's continued agreement. It's potentially available to any business. But as we'll come on to, the onus is on the taxpayer to ensure they've provided the necessary evidence that HMRC require, and indeed they will expect to see that evidence to get to an agreement. Two ways to sort of make an application initially. That's if for larger businesses that have a CCM or a customer compliance manager, HMRC are saying should make the initial contact via the CCM. That is broadly, that's businesses with turnovers of 200 million plus, so the sort of largest businesses. Below that level, if you don't have a CCM, then initially via the HMRC helpline. And so there's been a dedicated resource set up to make sure that helpline is more staff than may normally be the case. What you will need to do is follow up. For most deferrals, there'll be a written submission as well to follow up. I think the helpline can agree smaller amounts. I think it's up to £750,000 is the sort of the threshold where you could probably get agreement in principle over the phone, and HMRC have said probably within an hour of making that call, you could have that agreement for deferral. In terms of sort of tips and practical experience, what we are seeing with clients and businesses making these applications, it's really important to go into the call prepared, because HMRC will ask, will ask for information. They will ask sort of the detailed questions. So if you have that to hand, then obviously sort of puts you in the best position, and ultimately if a written submission is needed, then it will definitely be required. So total, as I've got on the slide there, total tax liability, the request for deferral that you're looking for, and importantly the period of deferral. As I said, that could be between 3 and 12 months. HMRC would expect you to have sort of a plan of when you would expect to be able to pay that back, and would want you to be able to confirm confirmation from the directors that the instalment plan will definitely be met. Reasons for request, it kind of goes without saying. It's sort of likely to be COVID-19 related in the current environment. Importantly, and I think Chris touched on this point with some of the wider measures, HMRC are expecting the time to pay to be a kind of a last resort. It's and they will need evidence of this, that you've had discussions with other stakeholders. So, for example, with current investors, is there facility to inject more cash with current lenders? And also what other cash saving measures are being followed by the business. So you need to be able to evidence that you thought about those things, had those discussions, explored those other avenues. I think that covers, I think, everything I wanted to touch on time to pay. The VAT deferral, which was announced middle of March. So this is, unlike the time to pay, this is an automatic deferral for VAT liabilities that fall due between the 20th of March and 30th of June this year. They will be automatically deferred until 31 March next year, and there'll be no interest or penalties for that deferral. There's no need to apply, so it's just a simple automatic deferral. The one thing that the taxpayer must do is to cancel or suspend direct debit payments. So whilst HMRC will not expect the VAT to be paid, they won't cancel anything from their end. So if you don't cancel the direct debit, you'll end up with HMRC just taking the cash as normal. And the final point, just to touch on income tax payment deferral. So again, like the VAT, this is an automatic deferral for income tax payments on account that would otherwise be due on the 31st of July this year. They've been deferred until 31 January next year. Again, applies automatically, no application required, interest and penalties won't be charged, providing that the payment is made by 31 January. And just the final point there, it's deferral is optional. So HMRC have said if taxpayers are in a position to pay that money over, then they should continue to do so. But as I said, there'll be no penalties or interest for not doing so.
Thanks very much, Kevin. Yep, thanks, Kevin and Karen and to Chris, and for providing that valuable insight, hopefully. And I think we're going to open up to questions. Is that the right narrative?
Yeah, so Adrian, I want to hand over to you to ask any questions that have come through. So I'm just trying to get through to the right screen. So Adrian, shall I hand over to you and let me know when you're done, and then I'll provide the chamber updates?
Yeah, absolutely. I have to say thank you, everybody, for excellent presentations. You've obviously done a particularly good job. There's a degree of stunned silence in the background. I did obviously clarify that the webinar is available in our webinar library. So, that may have actually reduced the need for some of the questions. And I've asked those questions as they've come through. In terms of additional points that have been raised, is there anything else that came to mind from our panelists that you would like to revisit? And presumably, in terms of turnaround, speed being of the essence, what would your thoughts be with regards to that? I mean, obviously, in terms of managing expectations, we've already had quite an extended period. Obviously, there's various invoices coming at companies, so on and so forth. They've been through a number of wage rounds in these difficult times, and liquidity may be coming under even more pressure. So, kind of managing that expectation. But best case scenario, if an application was to arrive to your firm today, what would you realistically be expecting? Whoever wants to answer the question, I'd probably put that to Kevin, maybe.
Sorry, was that an application for any?
Yeah, for each of the three schemes, but most likely CL bills and C bills, and probably C bills. particularly if you wanted to pick that up just in a moment.
Yeah, probably one for Chris, but...
All right, sorry. Okay.
All right, no worries.
Well, I was just waiting to see if Kevin could answer the question.
Not as well as you will, Chris, I'm sure.
Do you know what? It's a really good question, and there's been quite a lot of press about this over the past sort of week or so. And actually, I was looking up before this call about there is a website that now publishes the number of applications that have been made day by day. Interestingly, the number that have been approved. So for CBILS, as of last Thursday, 36,000 applications had been made and 16,000 had been approved. So it's about sort of around a sort of 50% kind of approval rate of the applications that have been submitted. There's certainly a lot of criticism just generally of the CBILS scheme about the speed at which lenders are processing them. And I think there's there's a resource issue, I think, in terms of just the number of applications versus the resource internally. I think too, there's this point about the lenders taking a level of the risk. So it's not, this is not 100% sort of government backed, these products. So that kind of causes sort of a degree of uncertainty for sort of people applying, and where these things are typically getting turned down or where, again, they sort of fail those sort of viability tests, sort of certainly pre-COVID-19. So some, I'd say, you're talking probably sort of, a matter of weeks. It's certainly not. So whereas, say, time to pay, I think Kevin referenced, you might be able to get an agreement within the space of an hour. I think you're talking sort of weeks in terms of sort of these corporate loan schemes. So it's, yeah, sort of the sooner you kind of get them in, the better, I'd say.
Very good, excellent, and thank you for that. Is there anybody else that would like to come back on a particular topic?
Yeah, I think, sorry, there's another
question. I've got a typed question here. Yeah.
Okay, yes, go for it.
So the question is, once furlough is over, can your employer make your position redundant? And the answer to that is yes. The scheme doesn't impact upon how a redundancy would normally be managed. That's still governed by normal employment law principles. As I said in the presentation, if you're trying to make somebody redundant during furlough, there may be some challenge or resistance on the part of the employee to that, given that the purpose of the scheme is to try and avoid redundancies if possible. But once the scheme is over, then yes, the normal employment law principles will apply, and if the role no longer exists or you don't need so many employees, then that position could be made redundant. Yeah, the employee's employment could be terminated.
Karen, thank you very much indeed. I believe that concludes the questions from me. Ataf, would you like to pick up?
Yeah, well, thank you. I can't see anything else that's come through the chat boxes. Thank you to everyone for that very detailed and very informative session. If there's no more, yeah, I can't see anything else. So, Adrian, I'm going to move on to the chamber updates, if that's okay. And once again, thank you to all our guests today who have joined us. And obviously the contact details were on the previous screen, but you can contact me or Adrian as well if you have any questions regarding. So I'm just sharing the contact details for our panelists on the screen there. Okay. So quickly moving on, couple of updates from the Chamber. So there's a new section on our website. Obviously, we're working really closely with our members, with the British Chamber of Commerce, with a lot of companies in the region. So there is a new section that we've introduced on our website, which is the Business Community Toolkit. You can see information on upcoming webinars, all the government updates, and some live updates from us as well. So this is a important link for all our members and non-members visiting our website. It is on the home screen of our website as well. Also quickly, we have evolved. We did evolve in January 2020. So we did introduce a new membership model. All the different tiers you can see on the screen right there. For all the members who are joining us, if you have any questions about your membership tier, do get in contact with your account manager or contact me, and I can direct you to all the non-members who are online if you're interested in joining membership and want to know a bit more about how the chamber works. Again, just simply get in contact or follow that link on the bottom of that screen. Once again, thank you, Deloitte. Thank you, Adrian, for facilitating the session. Hopefully we'll see you all very soon. Like I said, all the details on all upcoming webinars is on the website. So hopefully see you all soon. Thank you again to the team.
Thank you.
Thank you.
Thank you. Thank you very much, Adrian.
You're welcome. Thank you.
Bye.
Cool.